Hey, everybody. And we're having a nice evening in Pittsburgh, Pennsylvania. First real day of spring up here. Got up into the 70s. Garrison, how are you doing tonight? All right. I guess we've got enough time for everybody to get in. All right. So this is another case where you observe the obvious. The obvious is they just can't close this market, the Dow, below the T line, which is telling us two things. Number one, they aren't going up very fast, but number two, they just won't let it sell off. So as long as we can stay in this nice steady uptrend, even though it's a very, very flat uptrend, it just helps all the stocks that are doing well to continue to do well. The NASDAQ. This is just an index that is not tradable. I mean, we're basically just flat. And whenever they come out of the range, they bring it right back into the range again. So unless we're looking at this little scoop type action, I would suggest you still have enough long positions on and enough short positions to protect yourself. I say protect yourself in the sense that if this market decides it wants to shoot one way or the other, it's going to at least not let you get devastated in the account. So let's see what some of the other things are doing. Crude oil prices, as you can see, maybe you can't see. Let's make this smaller. Make this bigger. We're still in a very slow, waffling trend range, basically between 100 and 85 or so, which means that's probably where it's going to be trading for a while. On a shorter term basis, that's a hard one to be trading. We can see where the buy signal, island reversal, coming up, hanging man, coming off. Stochastic still heading down, and nothing yet to show us that there's really any strength coming into it. So you probably still have a probability of coming back down to test this trend channel, which should bring prices down into about the 85 or $88 range, which means there's nothing in the interest or in the crude oil prices that are going to affect there's sound. Is everybody getting sound? All right, Ziggy. Somebody might have to type to Ziggy to no picture. All right, Mura, you should be getting a picture. You might just have to sign off and come back in again. Right now, there's no picture because I don't know what's happened to our DY. Let's find howdy do. Now let's go to gold. Well, we're getting the charts that we've already gotten. Hold on for a second. There is no picture. Well, this ain't a fine howdy do. Well, what's happening here? Well, Shazam. All right, let's see what's going on here. Let's see if I can get any stocks. Well. Huh. Usually it comes back in a... Nothing is working. Well, this is... All right, let's see what happens here. There we go. All right. Okay, now let's see what we've got here. Gold, all right. It was just taking a rest, I guess. Okay, gold did a nice morning star signal, but it hasn't confirmed coming up through the T-line yet. So this makes it easy. We did a doji today. They will move it in the direction of how they open it tomorrow after a doji. So that's either going to tell you that the T-line is still acting as resistance, or you're going to stay down, or if they open up positive, that you're probably going to come back up toward the top of the trend channel, which I suspect would be up here to the 50-day moving average. Silver, well, pshaw. Okay, this was the 10-year notes. 10-year notes backed off a little bit today, but not anything that would make the interest rates a concern. Okay, all right. There we go. Something's glitching here. This is the U.S. dollar slowly rolling over. Not anything of great concern. The euro has bounced here the last couple of days. I think they said the euro and the dollar are almost getting to be 1-to-1 this morning. Let's see, British pound. Having a hard time getting up through the 200. If this starts backing off, it'll be in wave 3 to the downside. And the Japanese yen. Oh, maybe it was the yen that was getting close to $1. So notice what's happened here in the yen. Let's make this big enough again where we can see what's going on. Came right up to the 50 and then gapped down, and it's been still in this downtrending channel. If you're short the yen, you stay short until you see a buy signal. On the trade. Silver did a morning star signal, but isn't showing any great enthusiasm to get back up to the T-line. Once again, a doji today will tell us what they'll do tomorrow by how they open it. And then you have to watch diligently to see what happens once it gets to the T-line. David, I don't have the statistics. David's asking, do you have any statistics? Any statistics on how often an open after a doji continues in the same direction versus reversing and creating an engulfing pattern? How do you avoid the latter? Usually, if it opens positive and your stochastics are in the oversold area heading up, I say usually, that's not giving you any statistics. Let's just put it this way. Statistically, or just from experience, that is a truism, that it's going to move in the direction how they open it. Now, if you're down here and they open it lower and you're in the oversold area, yeah, you'd be a little bit more cautious because you are in the oversold area. But as you're starting to come up in a trend or down in a trend, let me see if there's anything that gap down doji if they open it lower. So you basically improve your probabilities based upon where the stochastics are. So if I saw it open lower in the oversold area, I'd probably be a little bit more hesitant about going after it until I see whether it's already in the oversold area and it's going to start coming back up. Versus if I see something rolling over, they gap it down and do a doji, do a doji, and then they open it lower and the stochastics are heading down, yes, I'll be much more apt to go after it in that case. Same thing right here. Your stochastics look like they're heading up. I think we could get rid of that. Stochastics heading up, and they do a doji on the next positive open. That's going to be a much, much higher probability than if the stochastics, that was kind of occurring with stochastics up here. Okay, sugar. Sugar's trying to bottom out from what it looks like, but it still needs to show some strength to stay up above the T-line. And copper, let's see, what did this do? This opened higher and came back down, so it still hasn't closed above the T-line yet. So you're still in a downtrend. The only way you'd want to come out of a short of copper is to see it open positive and trade positive tomorrow. Look back on the gold doji. Yeah, let's see, I'm trying to find something that would, just the probabilities that if you're in the oversold area and you see a doji, you're starting an uptrend, if they open up positive, number one, you've already got the trend going with you. Number two, we know the basic rule of a doji. So, yeah, I don't have statistics on how often that occurs. It just say it's one of those truisms that you probably want to go with it because the probabilities are so much greater that that's what's going to happen, is it's going to move in the direction of how they open it. Okay, let's see. I don't think there's too much to say. Well, the feeder cattle. Feeder cattle, I'm short. Part of our session tonight is how do you know when to start taking profits? And I'll kind of jump ahead here. You observe the obvious. If the obvious is if you come up to a resistance level, what do you want to see? You want to see strong candles going through. If you start seeing indecision, especially indecision which is just using that as resistance, that tells you probably want to start taking some profits in here, number one. Number two, even if your stochastics are heading up and you've hit a resistance level, worst case scenario is you take your profits and then you put buy stops up above the resistance level. Because if they come through there, that means that resistance level is not acting as resistance, obviously, and you can get right back in. So you've missed out on some profits, but you've gotten away, or you've improved your probabilities of not holding on to something that's heading back down. Wheat starting to come back up, but is not out of the trading range yet. So I would suspect that your upside right now would only be up here to the 50. Then you have to see what it's doing. But as you can see, the stochastics aren't in any hurry to bring this wheat up. Soybeans bounced yesterday and up a little bit this evening, but nothing yet to tell us there's been a change of investor sentiment. And corn, same scenario. That's had that big, huge drop. They'll probably at best bounce it, but then you have to definitely watch to see what it does once it gets to the back up to the T line. And cotton, here's another case where you start seeing a sell signal in the overbought area. What you want to do, see on a J-hook type pattern, is coming back up and testing the highs. If they bring it back up and fail, that tells you you're probably still in a downtrend. And today they closed it just below the 50. Well, you're already pretty close to the oversold area. But remember, where do most people sell? They panic sell at the bottom. So this could be a wave 1, wave 2, wave 3, bringing you down into at least maybe testing this area. Yeah, the stochastics really didn't turn back up to give you any, showing any strength. And what else do we got? Live cattle is kind of, this is where you kind of observe the obvious. Is this in an uptrend or is this in a downtrend? Well, obviously it's in a downtrend. So that's why whenever you see any sell signal, especially near the top of the trend channel, that tells you they're failing, and you probably want to be going short again. So where's the next likely target? Well, if you can see there's a trend channel here, well, possibly the target down here someplace. How long before they... Yeah, so this is, again, just kind of ask yourself, anytime you're seeing a sell signal, is this telling me something? Is this just a pause in an uptrend? Or is this likely a resistance to the downtrend? That's right, POT is already traded. Okay, let's take a look gander now. Let's see, I think I've done everything over here. Maybe not lean hogs. Lean hogs, that'd be a hard one to trade. It's probably bottoming, but that'd be a difficult one to trade. And let's see, we did corn. Okay. All right. Let's take a look at what we're going to kind of concentrate on. I'm going to get done here with some good-looking charts. Is how do you kind of tell when it's time to start taking profits? Now, SBGI has been working very successfully just as long as it stays above the T-line. And here's kind of the simple, what do I want to say, just a simple observation. Rounding curve, stays above the T-line, bam, they take it up. Now it starts getting iffy, and if you start seeing some selling, what do you think they're going to bring it to? They're going to bring it back to the T-line. Now you can see the trajectory again, slow rounding curve, and bam, they take it up again. Move sideways, right till you get to the T-line, you've got a left-right or a bullish engulfing, booster, breaking today, broken through new highs. Where do we think this stock could go? Well, if this was wave 1, wave 2, wave 3, this way is wave 1, wave 2, wave 3 should be up here somewhere. So this makes for an excellent timing as far as buying calls. Very rarely do I buy a call outright. But if you can see these patterns that aren't being deterred by the general market, which is the general market is just kind of slowly moving sideways, slightly upwards. Well, even if it's moving sideways, what it's basically telling us is there's not any real panic or fear in the market, and the sellers aren't in control. So even if it's moving sideways as slow as it is, it's giving the stocks that are moving up, more opportunity to move up because there's no real drastic change of investor sentiment. So this one's been a good one. I like the CPNO because it came out of this rounding bottom, is pulled back, did a nice J-hook type pattern. This one can probably still be bought tomorrow with the anticipation this is wave 1, wave 3 just getting started on the J-hook pattern. One that I haven't pushed around too much, but here's another one, AEGR. Also kind of looping, starting that slow curve to the upside. And notice the slow curve right here, breaks out nicely. Now we're starting to see like a little belt hold, not a big belt hold, but remember, whenever they gap something down below a trading range and bring it right back up into the trading range, even if it's not a signal, it's still telling us that when they take it down, there's buyers there bringing it right back up. So yesterday, or what is today, Monday, yesterday, Friday, was not a significant price move, but it gave us a significant amount of information, which was that as soon as this opened, the bulls were still buying, even though it may have ended up relatively flat on the day. We could see the buyers were there. We should start looking for buying to continue after that. Yes, I wouldn't be afraid of doing the calls on this one. And there's some, like this, where if we know that they're starting to break out to the upside, you can buy the calls outright. Again, very rarely do I buy calls outright, but on these slow rounding bottoms, essentially we're looking for a movement that even if it's just a short-term trade, like 1 or 2 days, you can be buying a 40 for maybe, I don't know what they're going for, but I'm going to say $1. And in 2 days, they're trading for $2 or $3. You come right back out of it. Yes, outright meaning a spread. A lot of times I like the spreads because if we can see what the potential market potential move is, at least we can take advantage of where the top of the trading range will be and sell a spread against, or sell that call against the lower price calls, and at least get a little bit more leverage and less exposure to the market. Zolt, another one that's kind of rounding bottom, J-hook. As long as this one stays above the T-line, you want to stay long. And Win was one that we looked at started looking at a few days ago. SWIN. The doji gap up is your best friend. Now, here's a case where it opened lower, waffled a little bit, and then started back up. That would have been a case where if I was long and it gapped down like this, but my stochastics were still heading up, I'd still just give it a little bit. I wouldn't close the position immediately. I'd give it a few minutes to see which way they were taking it. Now, if they started selling it off, yes, you close it out. In this case, it didn't take very much time for them to start showing that the bulls were there. And because of the visual capabilities that we have with candlesticks, we can see immediately when that candle starts turning green, that tells us something immediately, that after they open it, they're buying it, no matter where it is as far as the relative price of the previous day. Come right back out. Is that based upon profits or sell signals? No, if you come, I forget what I was, I can't remember what I was using, come right back out. But it was usually based on if you see something and it's not working, come right back out of it. What expiration time frame do you typically look for? Usually if I'm somewhere between 5 weeks, let's say we just ended expiration of well, we did March. Well, for the next 2 or 3 weeks, I'll be buying the Aprils. Now, when we start getting closer to the April expiration, remember, there's always a premium in the call or the calls, and there's also a premium in the puts. So, remember, the option trade isn't based upon what option strategy you're using. It should be based upon the math. And if the math says my risk-reward factor is much better if I sell puts, because if I think the price is going up and we've only got less than 2 weeks away to expiration, that trying to buy the calls that still have premiums in them may be not worthwhile, because it's got to move enough to cover the premium as well as the intrinsic value of the option, and has to go up far enough to get your money back after it passes those hurdles. On the other hand, if you sell the puts, that price doesn't really have to move too much, because at least the worst case scenario will be is that you're going to put at least the premium in your pocket. Even if the intrinsic value doesn't move, you're going to get that time decay. So that was a long answer to say that the closer I get to expiration, I may go from buying calls to selling the puts, just because the math makes more sense. Okay, let's. Time decay is on your side. Let's see, what are we looking at? It's filled the gap, but that doesn't necessarily, well, it doesn't look like it's exactly filled the gap yet. But remember, your stochastics are coming up. The filling the gap will be one target, but notice you're not extending yourself yet to get there. We're just starting back up in stochastics. We did come up from a gap up, doji followed by a gap up, which is your best friend. I doubt if there's going to be any resistance at that level. I don't think that's going to be significant enough. Plus, with your stochastics down here, I tell you there's still a lot more upside, that this filling the gap isn't going to be a resistance situation. Okay, we recommended KERX this morning, because where do the people start buying? When they're watching to see what happens when it gets to a support level. And the support level being the 50-day moving average. Plus, you got a slow rounding curve. Today did a doji. This makes it very simple tomorrow. If it opens positive, you've got everything going for you as far as a rounding curve, support at the 50s, stochastics coming up, a positive open, good breakout through here, which I don't know what this line is up here. But that gives us an opportunity to get a nice bounce and maybe back up into this area. But the probabilities are that this one's still heading higher. SGEN. Holy smokes. Well, we're at 8:30. We haven't even gotten past line 1 on another one that bullish engulfing with a hammer doji. If this opens positive tomorrow, fry pan bottom, strong price move. J-hook pattern, look for a strong price move. This has moved up 6 points or 8 points. Look for it to move into the $42, $43 range. Let me start going through some of these. OWW, starting wave 3. That's a good looking chart. MBI, another good looking chart. Notice where it's bottoming. Right smack dab on the 200, right at the same level it bottomed out before. I wouldn't be afraid to be buying this one. Just use the T-line as your stop. JKS, one of the solars, also has done a doji followed by a gap up through the T-line. Very simple. You buy this one, just use the T-line as your stop. First target should be the 50-day moving average, which essentially looks like about a 40% return. I'm going to put a little star next to that one. That might be on the recommended list for tonight. HIMX. This one, now left-right combo right off the 200 tells us there's more upside to this one. This one was one of our recommendations from not too long ago. And LNG, another J-hook setup. Inverted hammer, bullish engulfing signal. Now told us they weren't coming back down through the T-line. That's a very strong J-hook type setup. Ralph, yeah, Jim will put up all the settings for you. But real quickly for everybody's edification, T-line is the 8 exponential moving average, the 50, and the 200 simple moving average, and then stochastics. And the reason they're simple is that's what all the money managers around the world use for making decisions. And then my stochastics are 12, 3, 3. Slow stochastics. So LNG, nice J-hook. UNXL had a nice J-hook, opened, gapped up this morning on news, came right back down. So essentially, if this opens lower, we've essentially got a bearish belt hold. We want to close out the position. This one needs to open higher and trade higher to stay in it. I still have my UNXL calls. I just kind of watched it today, not believing what I was seeing. I should have probably closed out half the position as it opened. Unfortunately, I got tied up on some medical stuff. RBCN, Doji gap up. This next target is likely at the 200-day moving average. PGH, S.PGH. That has a very nice kind of a little piercing signal. Gap up through the T-line. If this opens positive, where do you think it's going to? Probably right back up here to the 200-day moving average. It's giving you a good about a 15, 17% return. FBC. What exactly does stochastics tell you other than overbought or oversold? Nothing. That's the only thing we want to know is, on a very simple basis, are we buying a candlestick buy signal in the oversold condition? Well, if we are, that means the probabilities are extremely high that it's probably reversing. So some people say, well, do we buy when the stochastics cross? Don't care. My buy signals are the candlestick signals. I just want to know what the stochastics are telling me. Are we heading in the right direction, or am I buying a buy signal? Obviously, a buy signal in the overbought condition doesn't mean very much. Yeah, same thing with Make Car Technica, though. I was so convinced that it was in a J-hook pattern that they were bringing it down and then going to take it right back up again. But that's just a perfect example of the market doesn't care what you think. The market's going to do what it's going to do, and you have to figure out how to make a profit from that. So I should have closed out UNXL when I saw that it was trading off and never recovered, but I didn't. ACAD, another one that can be bought on positive trading tomorrow. Obviously, the rounding bottom, bouncing up off the T-line area. And SB. S.SB. I think that's SB. Another nice little J-hook pattern. I think the volume was all right on this one. But here's your classic. There's the fry pan bottom. What do you expect coming out of a fry pan bottom? A strong price move. Where does the strong price move? Right exactly to a major resistance level, off the support level of the 50. Pulls back. Where is it coming back to? Probably back to the 50, except In this case, we see that it's starting to do the J hook. This makes it very simple. If this opens positive tomorrow, you can be buying immediately, because if this is wave 1, wave 3 should take us up into the $6, $6.20 area. Yeah, JC candlestick patterns are different than, remember, you're buying a pattern. Right here was the breakout of a fry pan bottom. Notice where your stochastics were. So that's why you want to know what the stochastic conditions are, or to expect on a pattern breakout. Much different than a signal. ANAC, another J-hook type pattern setup, and what wave 1 was pretty fast, hard mover. That means everybody was anxious to get in here, profit taking over. That means they're probably going to get back in here pretty hard and fast. Just wave 1 usually equals wave 3, not only in time, but in magnitude, or not only in magnitude, but in the time frame. MTG was one that we've been following, starting to come back up nicely. Notice the left-right combo. So here's another case where, again, it opened lower, but stochastics were coming up, and it was right here on the T-line area that instead of bailing out or shorting, give it a few minutes to see whether the stochastics are still part of the analysis. Fry pan bottoms, when they break out, they're going to be in the overbought condition. So that goes back to your simple, observation. Where do most people buy? They buy exuberantly at the top. So a breakout from a fry pan bottom is that exuberant buying coming back in after that investor sentiment has built back up positive again. And where does it start breaking out? Up in the overbought area, and that's where you get your big price moves. Okay, let me zip down through here. MTG, RDN, another one in that industry. Nice little scoop pattern. This one can be bought on positive trading because you've had a gap up today. And notice where they came back to that tested support, right on the T-line, and took it back up. So if they open positive tomorrow, that's going to be kind of a scoop pattern, number 1, confirming the scoop pattern, and number 2, breaking out into new territory. Pike, P-I-K-E, gap up, J-hook type pattern. These are the ones you want to buy because you can recognize that the profit taking is over. Now they're coming back in with strength going into the third wave. Navistar, another J-hook type pattern starting to set up. If it opens positive tomorrow, all you have to do is hang on to it until it closes back below the T-line. Do you just trade daily trades, and is that risky overnight? No. I'm a swing trader. Most of my trades are usually anywhere from 2 to 10 trading days. If I get a huge price move on a daily basis, I'll take at least half off. But I don't want to sit and day trade. I want to have a little bit more time to watch the positions. So most of my positions are 2 to 10 trading days. RJet, another one that closed above the T-line today after a bullish signal on Friday. Notice it used the 50 as support, closed above the T-line. Easy. Buy this one on positive trading and use the T-line as your stop. Yeah, I'd love to play golf. Just haven't gotten on a golf course for quite a while. So right now I'm doing projects like cleaning the garage or cleaning out the back storage room. GTLS, another J-hook type pattern coming off this little piercing belt hold type signal from right around the 50-day moving average. This one you can be buying. Again, probably some call spreads on this one would be interesting. If it went from 77 to 83. That's about 16 points. 16 points from here to take you up into about the $90 range. XR TX. This is the doji sandwich type play where it opened positive. If it did open positive, what was it telling you? That this area was not acting as resistance. That's right. Yeah, I've got those, did I say 6 points? What was that on? GTLS. Is this the one? $65, $75, $83. No, I think that's more like 16 points, isn't it? Ziggy, hang on, to hold your questions on individual stocks when I tell Jim to do the double line. FBC broke through. This one's got bullish signals. Now it's showing us the 50 is not acting as support, or I'm sorry, as resistance anymore. SSI, another a rounding bottom starting to break out into new territory. Now, is this one that you chase after? This is one where you might just buy the $28 calls with the anticipation if this is going to work, it's going to work over the next 2 days. And you get in and you get right back out. This is get right back out if it doesn't keep continuing on a strong uptrend. Okay, now let's see. We're still going to get to the ones where we're looking for when it is trying to sell. But here's a couple short positions that you probably want to take a look at. ALLT. This is observe the obvious. The obvious is you have sell signals, broke it down, came back up to the T line, indecisive, now taking it back down. This may be wave 1, wave 2, J-hook, taking you down further. So this one becomes very easy. If it comes back down below the low of today, you short it because that means this area is not acting as support anymore. There's still more downside. APOL. This one's that slow rounding curve. This should be one of on your favorite short list. When you see the slow curve like this, notice kind of the inverted scoop. If this opens lower, that starts your slingshot effect to the downside. Notice where you are. You're almost in the oversold area. But if they start slingshotting it down, you're going to be well in the oversold area. And where do most people sell? They panic sell on the bottom. Do you ever use the rule of thumb? If it opens and moves down and then back up through the open, buy it? Yes. That's one of my strongest, or one of the easiest entry strategies. If you see something that we think is a good buy and it opens and starts backing off, I put my buy stop one tick above where it opened, because if it comes back through there, that it tells me the profit taking for the day is over and they're moving in the direction that it should be moving. Let's see, KGC, another one that rolled over, bounced back up, but notice there's no buy signal here. This is just a bounce. Now they're taking it down. If it comes back down through this level, you probably have another 15% to the downside. WTW. Another one is slowly rolling over. But if this opens weaker tomorrow, you want to be shorting it. That'd be a good put strategy setup. SSRI. Rolled over. You're in a downtrend. If they start taking this down, suspect that the bottom of the downtrend will be your target. They can take it down into this area. Let's see. DRI Restaurants. Very simple. You didn't have a sell signal here, but then 2 days later you had a strong sell signal, bearish engulfing. Then you had a gap down doji. Makes it very simple. Your stochastics are heading down. If they open this week or tomorrow, your first likely target is probably going to be the 50-day moving average. Is that a big enough target to trade for? At least if you're buying some puts, it's big enough that if you know you're heading in that direction and they're doing it pretty hard and fast, that in a couple of days you might have some good profits on a straight put trade. And let me see, YPF. This is obvious. It failed up here. Let's see, I wanted to use this one. Again, if you're buying and you start seeing obvious sell signals right at a resistance level, at some point, remember, prices do not move on fundamentals. Prices move based upon investor sentiment. And if investor sentiment sees that it can't get through the 50, they're going to give up and then start taking it back down. We're just looking for the point where they've given up, and that's where we start shorting. Now, they've popped it back up a little bit. You're near the oversold area, but if this is wave one, wave three could take you down through any resistance, which means you'd be shorting on weakness, and then see where it goes once it gets down through the 200-day moving average. Now, did I do RVBD? Another one that's got the slow rounding curve, gap down. They tried to bring it back up, but notice what they did today. They just touched the T-line and started taking it back down, and stochastic's starting to roll back over. Where are you heading? You can see you're in a downtrend, so at least your first target is somewhere down here at the bottom of the trend. So if they open this on weakness, what's that? If this one opens weaker tomorrow, you can be shorting it. Okay, we've had some questions on when do you start taking profits? And that's the nice thing about the candlestick signals. Now, this is WBM, which had a nice little morning star type reversal here after hanging me. And this one I'd be buying. But notice the kicker signal that started this. Then we started moving away a little bit from the T-line. When you start seeing enough signals that tell you that they're not going anywhere, this is an opportune time to go ahead and take your profits. It's going to do one or two things. Remember, you're already in an overbought condition. If there's enough force to take it higher, but it looks like they're starting to get iffy in here, close out the position, put a buy stop just above this level, and then take the money and go someplace else. If they happen to blast it up through, that means they're in wave three, your buy stop will put you right back in. You may have to scramble around and figure out how to pay for it or sell another position to pay for it, but at least you know you have a pattern where you're going wave one, wave two, wave three. But notice what's happened up here. Once we got up this far in the overbought area and you start seeing a bunch of dojis, that means there is indecision. And remember, when there's indecision, that means they're going to do drastic or something drastic one way or the other. And that one way or the other might be 4 weeks away. Why sit there waiting? Close it out, knowing that they're probably gotten too overbought, and just put a buy stop up above the next level. TE, I think that's an O. Another one that I was using for an example, that if you're in an uptrend and you see your signals and you're far enough away from the T-line, go ahead, take your profits. And then you can always make a decision of what to do if it sets up a J-hook pattern. In this case, it may not have gotten there to qualify. You wouldn't, if you were buying here, you'd be buying on positive trading the next day, probably not enough to do it. If you're buying this one, you would need a buy signal, which you had your buy signal. Next day, you need positive trading. Well, it opened flat and came down, so you probably wouldn't be back in anywhere here. But this one's also setting up very nicely as a buy. Wave 1, Wave 2, Wave 3, Eves is just something that prices move in waves. We know there's Elliott wave. We don't necessarily have to be using Elliott wave. All we know is prices move and they backpedal, and then they usually move in another wave. So we're just trying to figure out what wave 1 is, because that's potentially what wave 3 could be, until we see there's not a wave 1, wave 2, wave 3. So if we're anticipating a wave 1, wave 2, wave 3, when that anticipation disappears, that tells us that's not going to happen. There's another pattern set up. So Elliott wave uses wave 1 through 5, and then it could be wave 1 through 7, or wave 1 through 12, and then you're going to have an ABC counter wave action. I'm not interested in all that. I don't need to be counting waves because I've got the signals to tell me what's going on. But then I also know that prices do move in waves. So when I make a decision based upon the signals, now I can see where my potential price move is based upon what we know about a wave action. Let's see. BEAV was another one that told us that when you have a nice strong up move and it starts getting iffy, take profits, especially if you have a situation like this. That's your bearish belt hold, bearish engulfing. Very simply stated, the bigger the signal is, the more compelling it is that the reversals has occurred. So and this was, I say, don't be afraid to take profits. That was always my biggest fear. Boy, would I hate to be in a stock that for once in my life it was going to be the one that made me a fortune, and I sell out way too early. Well, number one, I've never been in a stock that made my fortune. Number two, I know that most prices don't move up forever. That no matter how great the price move or how great the stock story, the potential, somebody's going to be taking profits at some point. And either they're taking profits because it's time to take profits, or it's reached an equilibrium where the bulls and the bears have found the true value. Yes, if I was short BEAV, now I was short or I was buying the puts, but when it opened positive today, now on this one it shows it opened up much more positive. On TCNet it showed it just opened positive. I closed out the position because what was happening? We were seeing that the NASDAQ and the Dow were opened positive immediately before selling off. And so if it was opening positive, where was the likely target? Up here to the T line. Now, if you haven't closed it, very simple. If it opens lower and trades lower, you stay short because obviously the T line's acting as resistance. On the other hand, if it opens positive, it tells you the T line's not acting as resistance. You want to be out immediately. Let's see. I'm just trying to find a few more examples of when you sell. Whenever you see a gap up in an overbought condition or getting close to an overbought position, it shouldn't come back through the previous day's low. Now, this one was a signal. This was a shooting star signal. If things were great, it'd go up. If things weren't great, it shouldn't come back down through the open of that candle, and when it did, that's when you should be stopping out. So, remember, prices move because of investor sentiment, and investor sentiment will tell you what's happening, especially with some very simple rules that candlestick signals provide, that if you see a gap up, start watching for a sell signal. Netflix, trading in a range. Now you have a bearish engulfing. and now you have it trading out of the range. When they start trading out of the range, I think I can do this. I want to do this. You can see there's kind of a trading range, and they break out of that trading range. Well, that tells you a story. That tells you what everybody else is watching. They've broken it down. You want to be out of that position. On the way up, where did it start selling us if we really got some selling? Didn't really have a sell signal here. Pulled back indecisively. This was the first place. Now, this stock had just moved from 100 to 190. So it was up 90%. And then you have a bearish engulfing signal. Take some profits. The worst case is you have a J-hook pattern that starts confirming. And in this case, with it moving that much, I'd probably want to see it confirmed by coming back up through the high. That'd tell me there's a new boost of bullish sentiment before getting back in. But anytime you see a good price move and a strong sell signal, now remember, there's going to be times when prices move back, but they're not necessarily going to be sell signals. Oh, I forgot what I was saying. Oh, so there's a vast difference about prices moving back without a sell signal versus seeing the sell signal. Remember, we wouldn't be here today if the Japanese rice traders didn't find that there was some significant information in the signals, which they have identified for us. Now, HGG, another one we recommended because of the rounding bottom, but notice what it's done today. It's done a shooting star doji type day. So observe the obvious. This might be the sellers taking control. If it opens lower, where do you think they're taking it to? They're probably bringing it back down to the T-line. Is it going to stop there? We have no idea, but why take that risk? We know that if we see a shooting star doji in an overbought condition and they open it lower the next day, there's only one thing to do, and that's close it out. Probabilities are that they're going to come back to the first support level. Worst case scenario is they open it lower and then bring it back up through this candle. You can always buy it back. All right, you may have missed out on 17 cents, but that 17 cents was just insurance that you weren't holding on to something that might come through the T-line and all the way down here before you get out. Do we stay short? Yeah, I would stay short on Netflix until you see a strong buy signal. Humbug. So even though you're down in the oversold area, still want to see a buy signal. Where's the potential targets? The support level. If it breaks the support level, then where's it going to go? Fill this gap right about here at the 200. HG, NT, WK, I think I was using this one. This is one that we were hanging on to. But notice what happened over here. You had a nice fry pan bottom breakout. Here's your first sell signals, a left-right combo. Where is it probably going back to? Probably back to the test of the T-line. Is it going to bounce from there? I have no idea. Just take some profits when you start seeing the sell signals. Now, here's a dark day, but it's not a sell signal. Didn't close more than halfway down this candle. It was this day here. You have a dark day showing some selling, not true selling or true sell signal. But a couple of days later, you have a bearish engulfing after some selling already showing up. That starts telling you this is where the bulls and the bears are starting to lose. The bulls losing their force, the bears stepping in a little bit. Take your profits. You can always buy it back on the next buy signal. I am Sam. I'm working on the options center on our stuff right now, so we're going to be it's going to be soon. Unfortunately, my schedule isn't quite what I expected it to be, but we will have, and it probably won't be a full day. It'll probably be, for members, it might be like a 5-day where we work on spreads one day, credit spreads another day, selling put spreads another day. So we'll try to break it up where it's not overloading everybody at one time. Candace, that is kind of a function of what the market is doing. If the market is opening positive and the stock you're looking to buy is opening positive, that pretty much tells you they're probably doing exactly what you expect them to do. You want to be buying immediately. On the other hand, if the market is opening down and your stock is opening positive, there might not be a great amount of force taking that stock up, so you can just wait to see whether they're have opened it and will flounder it a little bit or pull it back. But if the market's opening down and the stock you're looking at buying is opening positive and trading positive, that tells you it's not giving a hoot about what the market's doing. The other side of it is the market opens positive and your stock opens lower. I just put a buy stop one tick above the previous day's close, because if it opens lower and then comes back up through that level, that tells me they just opened it lower that day and then the bulls step right back in again. So, yeah, it all depends on what the conditions of the market. You don't have to jump in. I'm not trying to get every last dollar out of a trade. I'm trying to get the fat part, low probability, or high probability area, low risk area. ADTN. Another one where we started seeing the selling up here. This wasn't quite a sell signal, but you had some selling. Took it back up. This was your sell signal. So if you start seeing selling, remember, the advantage of the green candle and red candle is tells you what they're doing after the open. Even though it might not be a sell signal, it's telling you there's sellers in there. After the sell signal, you definitely want to be out of it. Usually one tick above the previous day's close, because remember, the Japanese rice traders put much more emphasis on the open and the close. That's what creates the candle. The wicks are just the trading range. So if it opens lower and then comes back up through where they closed it the day before, that means they're trading above where they closed it. That means the bulls are still there. That's where I'm going to get in. Let's see. Okay, Facebook. Here's an example that if you expect something to hit a target, like right down here, where was the logical spot that it was going to head for to hit a target? 50-day moving average. So if you're climbing up there and it just reaches it extended to get up to the 50-day moving average, then go to your 5-minute and your 10-minute chart. See if they're able to get through. If not, take some profits. Worst case scenario is that everybody and their brother is watching the resistance level. Take some profits, put a buy stop just above the resistance level. If they back it off and then come back up through, all right, so you missed out on a few cents. But anytime I see something just now climbing to a resistance level, I watch my 5-minute chart and see if they're starting to sell off at that level. Sell signal, and or if they sell it off and start back up, what type of pattern are we expecting? A J-hook pattern. But notice what happened up here. We started seeing some selling, then we had a doji, then a hanging man. And then it opened lower again after the hanging man. This is probably where you want to start getting out. You definitely get out if it comes back through the low of a hanging man, because that tells you after they get a hanging man signal, the bears were in control. And if the bears were in control, they and come down through the low of the previous day, you don't want to be in that position. You're expecting the price to go this way, and they're starting to take it this way. Get out of the position. You can always buy it back, But when the probabilities of what's happening after a sell signal is occurring, get out of the position. As we can see right now, it's in a buy position where we've got left-right combo and a doji. Very strong probabilities that if they open this positive, the 50 is not going to act as resistance. And, I'm sorry, the T-line is not going to act as resistance. And you got a potential of a doji sandwich. Okay. Yep, I've made a fortune answering questions on Jeopardy. It's just they never have invited me to come and partake. SABA. This was also an illustration of when is the time to take profits. When you start seeing the selling, especially closing back below the T-line, strong bullish signal, then lots of indecisive trading. That's after about 4 or 5 days. If you're in a bull uptrend, it should still be in a bull uptrend. In 4 or 5 days, you're moving sideways. Get to that should tell you that the bulls aren't there anymore. Get ready to take profits on the first sell signal. It looks like a good place to sell some puts. That could be, Bill. Okay, let's see. I got a couple more. Let's see. ERU. You can see the trajectory is starting to slow down. This is where you want to be getting out of the position. Take your profits. You can always buy back if it comes up through this area here, because that tells you it's now acted as support and the bulls are stepping back in. But at this point, if it owns from down here somewhere, at this point, is this stock telling you it's going up or going down? Well, if you have no idea, get out of the position, because the reason we're investing is we're trying to find situations that tell us the probabilities are extremely strong that it's going in our direction. That may mean that you get out of a position when it's soggy for a while and get back into it later when it tells you when the direction is occurring. And TWC, there's a hanging man, evening star type signal, stochastics heading down. Whenever you start seeing selling, remember, we wouldn't be looking at these today if they didn't work an extremely high percentage of the time, as the Japanese rice traders have shown us. Let's see, I think that's about all I've got for tonight, except I'm supposed to remind everybody that we've got apparently one seat open that's not going to be used for the Houston private training session. So if anybody's interested in expediting their learning of candlesticks, your room will be paid for at a nice hotel, and you're going to get some good food, plus hopefully some good information. So with that, are there any questions on candlesticks? Not individual stock positions, just questions. All right, then Jim, do the double line. And in 10 seconds, do another double line. Okay. Is there a scan for a fry pan bottom? We're working on that. That's my next announcement that I forgot to do. If you've got a formula that you've been working on, we're going to be working on maybe a Saturday session where people that like to formulate will get together and we'll try to add or put the elements of a few scans that we've come up with so far for fry pan bottoms, seeing if we can put them all together and get one good one out of it. Not to say that the ones we have aren't good. Just want to see if pooling everybody's ideas will help us out and getting a much better formula. Let's see, JetBlue. Coming back up, just like our jet. This one's now above the T-line. This one you can be buying using the T-line as your stop. Ford Motor Company coming back up. Looks like a double bottom. Doji, nice strong move. I'd be a buyer on any positive trading tomorrow. Bank of America. It's in the trend channel. You can be buying after the bullish engulfing signal with the anticipation that it's going to come back up and test the top of the trend channel. GPRE, another one that can be bought. Nice little rounding bottom, setting up nicely. FTK. This one's got a big left-right combo. This one you can definitely be buying on positive trading. Probably at this point using the halfway point of the today's candle as your stop, which might equate to the T-line by tomorrow. And SLCA, another big left-right combo. Notice they backed and filled today, came back up. If you buy this on positive trading, you want to see it close above kind of this level right here. That'll tell you they're breaking out and moving away from the T-line. FXY. Uh-oh. That's a Coinstar. Coinstar, that's kind of, yeah, it's not very definite yet. You still need to see a buy signal and a close above the T-line to want to go after this one. PRKR. Another doji sandwich potential. If this opens positive, you've got your doji sandwich after a Morningstar signal. More than likely, they're going to come up and test this level, and then you'll have to see what it does once it gets to that level. AER. That's a very nice chart. I anticipate that the volume was decent on this one. That's the obvious. A rounding bottom supporting right here on the 50 with a left-right combo, closing above the T-line. Wave 1, wave 2, wave 3 could be a good 20% move from here. And FCX. Double bottom situation. This one can be bought. Just watch what it does once it gets to the 50. It needs to break through that level, obviously. AIG. Well. There we go. Left-right combo, break out through this level. You continue to hold this until you see a sell signal. GM. GM is still caught in a wedge. I wouldn't buy GM right now until it probably broke up above the 29.50 level, breaking out through this level. GLX. Strong Morningstar type signal. This one you're buying using the T-line as your stop. AL, another Morningstar signal closing right on the T-line after a hammered doji up to 50. This one you can be buying immediately on a positive open, not one that's closed back below the T-line. HNI. Same scenario here, kind of a belt hold, almost a bullish engulfing signal, probably is a bullish engulfing signal with a gap up. This one can be bought on positive trading. Just don't let it close back below the T-line. CRE needs to get up above the T-line to go after it. It's a good setup, though. And TCK. Well, S.TCK. This one, if it opens positive, will be breaking this downtrending channel after the bullish engulfing signal. Want to be a buyer on that one. And CBMX, nothing there that would make me want to buy this one. You got the rounding bottom, but your stochastic's heading down. There's nothing here right now that says that the bulls are trying to step in. Bid Ford. NSC. Belt hold, bullish engulfing, bounce. Bullish confirmation with a close above the T-line. Bouncing right off the 50. This tells me they're going to back up in here and then do a 45 degree off of there. SGMO starting, but this still needs something to show you that it's breaking out of this range. So if it opens positive tomorrow, you want to buy it, just use the T-line as your stop. And you should see a strong move somewhere to break it out of that range. Glue. Bouncing off the 50, did a doji. If it opens positive, anticipate they're going to take it right up to the 200-day moving average. Let's see. I don't think we can get GNIN or GNIN. No, won't come up here either. ONTY. You can buy it, but I'd rather pay $222 for it, knowing that it broke through this little resistance level, and that it's on its way up. DRRX. This one, look at the hammers right here. Tails to the downside. Next target is the top of this trend channel. And PACB. Well. There we go. Kicker type signal. This one you want to buy on strength. You just want to see it get through this downtrending channel or a wedge here in the next couple of days. And WFM. Nothing that you want to go after just yet until they can close it above the T-line. TWC, yes, if it opens lower tomorrow, you anticipate it to come back down to test the 50 and the 200-day moving average. OC, another one you can buy on positive trading using the T-line. VPC, S.VPC. That one's not coming up for some reason. We did Bank of America, El Paso. Whoops. This one you continue to hold until you see a sell signal. And TECD. Nothing you want to do. You can see there's really nothing here yet that tells us there's any bulls taking control. If you're short, stay short until you see a close above the T-line. And let's see, did we do FFM Whole Foods? Yeah, nothing there yet. PSX. Not anything great yet. Another one that I'd rather see it close above the T-line. Right now you got to get through the 50 and the T-line. So you definitely need to see strength to tell you that those are going to now not act as resistance. Kohl's needs to open positive and trade positive to stay in it. Obviously, the second time it's come back up to test the 50 after a good doji gap up. Now you got some consolidation, but it needs to open positive and get through the 200 quickly. Otherwise, it's going to ping pong here between the 50 or the 200 and the T-line until they can crunch it up through. Whoops. THM, this one you can buy on positive trading tomorrow, as long as it stays above the T line. And TAP, nothing there that would make me want to be long or short at this point. If it opens lower, I'd rather be short, anticipating it's going to come back down and test the 200. MEI, this one you can be buying on positive trading. Anytime you see that slow curve coming back up through the T line, stochastics coming up, wave 1, wave 2, get ready for a wave 3 move. Goodyear, this one you can buy on positive trading tomorrow, 50 being the target. RTH, whoops, yes, the RTH. This one, all you can do is stay long until you see a sell signal. CF, if you're short, stay short until you see this close above the T line. Now, if they open this positive tomorrow, you're probably seeing bullish confirmation. You want to be closing out your shorts and possibly going long on a positive open. Las Vegas Sands, looks like it's bouncing back up. Another one you can buy, but don't let it close back below the T line. IWM is the Russell, bouncing back up. If this opens positive also, it tells you the T line's not acting as resistance, possibly more upside from that market index. Nice little scoop type pattern. This one, you definitely want to be a buyer on positive trading after it's come all the way across to find support at the 50. And IMAX, this one can stay long as it stays above the T line. As you can see, it's not a very fast moving stock, but it's moving in the right direction. Crocs. Crocs probably has some upside, but nothing that I would get real thrilled about. Really didn't do a reversal signal down here, just an up day. And your upside potential is 1660. I think there's probably better places to have your money right now. Whoops. ZIXI, that's a good looking chart. Doji gap up off the 50, probably going to come back up into this area and then do your 45 degree off of there. There's a MMKD. This one's got the Doji sandwich setup. If it opens positive tomorrow, you want to be a buyer. Do not want to see it close back below today's close. FLS. This one's coming back up. Again, you're going to be in an uptrend. Just be aware of what your upside potential is percentage-wise. Axle. Supporting here at the 50. If you buy it, just be conscious of what happens at the T line with the anticipation that they're in an uptrend, taking it back to the top of the trend channel. AGU. This one has got a good chart to it. Wouldn't be afraid to be buying this one with the anticipation that you're going to have enough juice to get through the 200, so the 50 should be your next target. And GDX, stay short until you see a buy signal. let's see, VMW. Another one where you stay short until you see a buy signal and a close above the T line. Cree trying to bottom. It still has to get a close above the T line to go long, though. Let's see. Did I do ZIX? IDIX. Big scoop type pattern setting up. This one you can be buying with the anticipation of moving up to the 50, which would be the handle of the scoop pattern, and then see whether it breaks out from there using the T line as your stop. S.Apple. Nothing here that would tell me not to stay short until I see a buy signal. You're getting in the oversold area, but you're still in this downtrending status. Tomorrow, if you're tomorrow, if it opens lower, you can still be shorting it with the anticipation that it's going to come down to this level. And BYI, that might be a big belt hold. This one, if it opens positive, especially comes up through the 50, and if you have your short positions on, you want to close them out. Nuance, don't want to buy it yet until you see a buy signal confirmed. And this would be a good spot to keep an eye out for it. S.CP. This one you can be buying with the anticipation it's going to come back up and test the highs, and then maybe a 45-degree off of there. Open. This one also, Doji sandwich potential. Remember, they wiped out a lot of sellers today or yesterday. Doji, if it opens positive, you want to be buying immediately with the anticipation of the same type of price move as the first half of the Doji sandwich. HW, another one that can be bought if it opens positive above the T line. CENX, this one you can buy. Just be very careful when it gets to the T line what it does. But you've got inverted hammer, doji. If it opens positive, at least you know you're probably heading to the T line. But then use the open of today as your stop. It shouldn't come back down through that level. And BHI also supporting here. This one can be bought on positive trading with the anticipation you're going to come back up and test that level. CRM. Yeah. CRM. Nothing here that would make me want to go long just yet. If I was short, yeah, it better be floppy tomorrow, not very strong. AGO, this one you can be a buyer. This one, that's a nice looking chart. Left, right on the 50-day moving average. CKH. This one you can buy. Kind of a little scoop setup, closing up above the 50. With the anticipation that if they get it running now past this resistance level, you could get back up to the 200-day moving average fairly quickly. BBBY, stay long until you see a close back below the T line. I would anticipate this is a J-hook pattern setting up. Notice the cradle pattern that started this one up. Goldman. Nothing there yet. stay short. You look like you're trying to bottom, but you still have to stay short until you see a close above the T line. IOC, I wouldn't be long or short this one. If you're, it's still in a wedge, I'd rather find something else. MTW. Another one that's bottoming out right where it bottomed before. If you own it, it needs to not trade back below below the low here. If it does, it's not heading for the T line. Okay, let's see. What is a double line? Ted, the double line is, when I say the double line, that's when obviously you have seen that everybody that has individual stocks can put them in. So Jim will do a double line. That's when we start, and then he'll hopefully do a double line very quickly right after that, and that's when we stop. Caterpillar moving up. Oh, no. Tractor Supply moving up nicely, breaking out into wave 3. Caterpillar still in a downtrend. Stay short until you see a buy signal. Deere, this one you can be buying on positive trading using the T line as your stop. We did CHK, Coates. Nothing there that would make me want to be long or short. You want to find something better. This one's too flat. Is there a video I can review on your system on outside of this session? Yes, Ralph, just go to our products and services. I think there's about 34 videos on there that you can use. An OVTI. Nothing yet here that I'd want to buy until it closes above the T line. If the Japanese could figure out prices so well with candlesticks, why can't they balance their budget for 20 years? Bill, you got me there. Same scenario. If all our politicians are so smart, how come they can't do a budget for 4 years? But I won't even get off into that. Be opening up a can of worms. PAA, stay long as it stays above the T line. And NRP, another one you can be buying, kind of a cup and handle setup, buy on strength. Yeah, I wouldn't buy GM right now. Okay, let's see. What else we got here? CNX. Whoops. This one, I just too choppy and not for a big enough price movement either way. You're in an uptrend, but I would not be a buyer of this one until it got out of the sideways market or sideways mode that it's in. Okay. Any special situations when you would consider fundamentals? Candace, we are right now in the process, I say in the process, hopefully the end of quite a few months of getting things set up for our longer-term picks. And our longer-term picks are going to be based on the chart setting up nicely for a long-term hold. But before we get in with both feet, we will have enough research on why those charts are coming up, what the fundamentals are, and what analysts are thinking, whether it's Ford or international paper or anything like that. Something that we wouldn't be trading every day, but be more interested in why that long-term chart is starting to set up. What are the fundamentals? So that will all be available here fairly soon. And I'm not going to put a time frame on it because I've already missed the time frame by a mere 9 months. Started on this back in August or so. BlackBerry, another one that's in a wedge. I wouldn't be long or short. MCP. S.MCP. Ooh, let's make this. Nothing there yet that would make me want to buy this one. And that definitely needs a strong buy signal. Zach has not put let's see, AGCO. AGCO is setting up for a doji sandwich. If it opens positive, it's breaking through the T-line and doing a doji sandwich setup. Any predictions on where bonds are going? Well, just based upon the bond prices, they might on the short term pull back, but it still looks like they're still going to be in an uptrend until you see a massive sell signal in the bond market. Oh, on FIO. Yeah, FIO we recommended not too long ago as a short. We're just staying short until we see a buy signal. Live cattle. I am short live cattle ever since the evening star signal, and we're in this downtrend as long as it stays below the T-line. CALL. This one, all you do is stay long. This one's got a doji sandwich set up. You can buy this on. Let's keep politics out of here. I've discovered I've never made a single dollar on anybody's evaluation of the politics. We all know what the politics are, and we can all make our own evaluations. This is a doji gap up. This one you can be buying on strength tomorrow. Okay, I guess we're hot. Okay, sorry about that. It's not that I'm skipping any, it's just my speed reading sometimes. Let's see. Not that, so maybe it's HOPT. Hot topic, is that a buyout? HOT, all right, let's see, S.HOT. Oh, okay. This one, sideways, the bottom of the channel, maybe go up to 64. That's not enough. There's better charts to be trading. And FIO is still stays short, because if you observe the obvious, obviously you're in a downtrend, and I would suspect if it breaks down, it's coming down to the bottom of the trend. Okay. Thank you, Marcia. Q-Core was just a flabbergaster. It's right back to the 50. If it opens weaker tomorrow, you definitely want to be out of it if you're in long. It has to open positive and trade positive to stay in it. Okay, and Beeve, we closed that one out today because that did open positive in the oversold area. That one's been closed out as far as a short. It can be bought long if it opens positive tomorrow. And VFC, this one, all you can do is stay long until you see a sell signal. Okay, let's call it a night. Thanks for showing up. We'll see everybody in the chat rooms tomorrow. We'll talk to you then.